Hello, welcome to the European Open briefing for Tuesday, January 31st. I'm Rafi Boyadjian, currency analyst at xm.com. We're going to be looking at what's happening in the currency markets today. So let's have a look at the main headlines before the European Open. The dollar is still under pressure by Donald Trump's policies, mainly his immigration policies, where he banned people traveling from 7 Muslim majority countries, as well as imposing a temporary ban on refugees as well. The markets are a little bit quieter, a bit calmer today, although overall we still have that risk of sentiment, and this has benefited safe havens such as the yen. The yen was up against most major currencies in Asian trading today, and the Swiss franc and gold are also up on that safe haven demand. The main news in terms of monetary policy was the Bank of Japan, where they announced that they've kept monetary policy unchanged at their January meeting, although there was little response to this in financial markets. So let's begin with the dollar-yen pair. We can see the dollar has been steadily declining since Friday. It hit a low of 113.24 yen, although it's currently a little bit firmer, trading just below the 114 level. The main reaction has been why the dollar continued to fall was Donald Trump. He fired his acting attorney general. The acting attorney general was refusing to enforce Donald Trump's immigration ban, and that led to her dismissal, and that's created additional uncertainty in the currency markets. Although we did have fairly positive US data out yesterday, this hasn't done much to support the dollar though. We had the personal consumption expenditures data. We saw consumer spending in the United States rise by 0.5% month on month in December. That was the highest in 3 months. And we also saw the Fed's preferred measure of inflation, the core PCE price index, that was steady at 1.7% year on year. Although there was an upward revision in the prior months from 1.6 to 1.7. There was also some housing data. We had pending home sales, which also beat estimates. But the main focus now is the FOMC meeting, which begins today, and the announcement will come tomorrow. Analysts are not expecting any change in interest rates in the US. Although the Fed may signal a possible move at its March meeting. Let's move on to gold. We can see as the dollar had been falling since Friday, the gold has been going up. It broke above the $1,200 level this morning. And that's mainly, again, on that market jitters on Donald Trump's policies. The yen hit a 1-week high against both the euro and the pound, while the Swiss franc has also been doing rather well. It hit an 11-week high against the dollar and a 7-month high against the euro. And of course, it's worth mentioning that the eurozone has its own uncertainties this year, mainly on those elections coming up in France, Germany, and the Netherlands. So that's also hurting the euro against the Swiss franc. If we move on to Japan now, we can see we had quite a bit of economic data out of Japan. And of course, we had that Bank of Japan policy decision where they kept rates at minus 0.1%. The only change was that the bank extended the deadline for its loan program that it currently has going in order to boost lending in certain industries. But apart from that, there was no change. The main headline from the Bank of Japan was that they revised up their forecasts for economic growth. They expect growth for March, the year ending March 2017, to grow by 1.4%, up from an early estimate of just 1%, and for fiscal year ending March 2018 from 1.3 to 1.5%. Inflation forecasts were kept unchanged, and the bank is expecting to hit their 2% target by March 2019. Of course, that deadline had been previously put back several times. In terms of data, we can see household spending, although it fell in December year on year, it was above forecasts of minus 0.6%. It was down by just minus 0.3%. The unemployment rate was steady at 3.1%. Industrial output beat estimates from instead of 0.3, it expanded by 0.5% in December. So that's good news for GDP growth in the fourth quarter, which hasn't been released yet in Japan. And we also had some construction orders and housing starts. Housing starts was slightly below estimates. If you look at the European currencies now, both the euro and the pound, they fell yesterday. The euro has bounced back, though it's currently back above the $1.07 level. It fluctuated yesterday because there were some comments from the ECB Governing Council member Novotny, who said that the ECB won't be discussing tapering its QE program in March, nor is unlikely to do so at its June meeting either. So that pressured the euro because it means that we will see ultra loose monetary policy for a while longer. Although afterwards, when the dollar fell back, we saw the euro bouncing back. The pound, on the other hand, is still stuck near yesterday's lows, although currently steadier at around $1.25. Of course, we've got that Bank of England policy meeting on Thursday. Most analysts expect the bank to be slightly more hawkish, given that the economy has outperformed most forecasts since the Brexit vote. So that could push up sterling on Thursday. On the other hand, Bank of England, especially Governor Mark Carney, is still expected to maintain a cautious tone and say that the risks can go either way, to the upside or to the downside. So we'll see what will happen to the pound on Thursday. If you move on now to the economic calendar, you can see it's quite a busy day today. We had business conditions, business confidence index out of Australia. They edged higher in December, although there was little reaction to the Australian dollar, which has been fairly steady over the past couple of days. We had some German retail sales data which missed estimates, but the main focus will be on Eurozone data. We've got the flash inflation for January. We expect to see inflation in the Eurozone rise sharply from 1.1% to 1.6%. We also have the flash GDP estimates. Again, growth is likely to accelerate in the fourth quarter from 0.3 to 0.5%. We also have unemployment rates coming up, and we're also going to have GDP, the monthly GDP data out of Canada later. And in terms of US data, it's we don't have too much major data. Mainly, it's going to be the Chicago PMI and the Conference Board's Consumer Confidence Index for January, which is expected to ease slightly at 113.0. That's it from me. Thank you very much for watching and have a great day.